results for the period ended March 31st, 2020. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then 0 on your touchtone phone. Please note that this conference is being recorded. I now hand the conference over to Mr. Vijay Chaudhary from Schaeffler, India. Thank you, and over to you, Mr. Chaudhary.
Thank you. Ladies and gentlemen, good morning and welcome to the results call for Schaeffler India. Today we have with us Mr. Harsha Kadam, CEO of Schaeffler India, online from Pune, and Mr. Satish Patel, our CFO and Director of Finance, Schaeffler India, online from Baroda. As you know, the management is online from different locations, so there may be instances where they briefly consult each other and then respond. Kindly be patient if the line goes on mute for some time. We'll be with you. And I now hand over the call to Mr. Kadam, who will take you through a short presentation on the results. Over to you, Mr. Kadam.
Thank you, Vijay. Good morning, ladies and gentlemen. Welcome to this investor call. In this challenging and unprecedented times that we are in, it gives me great pleasure to share our performance for the first quarter. As you all know, we were already living in a world of volatility, unpredictability, a complex world, an ambiguous world. And as if that was not enough, the fashionable jargon, VUCA, landed at our doorstep, uninvited, with an altogether new phase called the COVID-19. Faced with this unprecedented challenge and the enormity thereon, we, the Schaeffler team, in India got together to respond and act now to protect and run our business today, and also plan and retool and recover the business for the future. So in this period of the officially declared lockdown, we got into a mode where we had to respond to the crisis and protect the business first, ensure the business continuity, and accelerate through the recovery process. Moving on, look forward to retool to the new normal that is going to emerge post-COVID-19 scenario. As I said earlier, responding to the crisis, the first thing was to take care of our employees and protect our employees. So I would like to take you through a brief presentation wherein I cover first on what Schaeffler did during this COVID crisis and how did we manage this crisis, on how do we continue to manage the crisis. I would like to touch upon a little on the economy and the market. Next, I would like to take you through the first quarter 2020 performance and a little information on what is the situation on our operations considering the lockdown situation. So I was on slide 2 and I moved to slide 3. As you can see, like every organization has done, we at Schaeffler, we got into a crisis management mode, and a crisis management team was formulated as early as the evening of 5th of March. And the team was activated, and we got into a total evaluation, assessment, and we put in very strong protocols to measure where are we today in the crisis and what needs to be done to manage the crisis. We began to implement all the safety practices of social distancing, hygiene management, and to some extent started to use the protective equipment immediately since the 5th of March itself. And also, we began to share a lot of awareness within the organization, be it in our plants, be it in our regional offices or in the corporate offices. We began to share a lot of information with our colleagues and employees to bring about the awareness of the magnitude of the unprecedented challenge that was unfolding to us. To share with you, we moved to work from home from the 17th of March, and I would like to reiterate here that we were very proactive in taking these measures even before the government declared a lockdown and moved into the crisis management mode. So we proactively took actions and necessary steps to ensure that our employees were safe. That was paramount to us. Secondly, we got into a mode to look at that our customers' operations run well. So we took care to track our customers' requirements, and we looked at our stock situations, and we were preparing for what was going to come. In the process of moving from a work from home situation, we also resorted to making sure that all the necessary infrastructure by way of communications, by way of connectivity, was established with each and every management staff, and also with the use of social media, we were able to ensure that we stayed connected with the last man in the organization. In all this, we also took care that we increased our communication and engagement levels with our employees, because we believe that to keep the morale and motivation of our employees high, we have to increase our level of communication. We resorted to communications by way of video messages by the leadership teams, by podcasts, by letters, communication through letters, and this was internal. Even the external communications, we did not stop. We continued with the external communications wherein we were informing the necessary authorities. Our customers were kept well informed of what was happening in our organization. Plus, we also continue to inform the stock market and the regulatory authorities. Also, in addition to this, we also did a bit in terms of community care and towards the COVID cause. And we supported a lot of needy organizations that came forward seeking our help. We have gone ahead and helped them in this sort of crisis to help manage the crisis. I move on to the safety measures that we put in. What you see on the slide is some of the safety measures and protocols that we have put in place, which is very comprehensive, in line with our Schaeffler production system. And this is now that we have restarted the factories and the plants, we have ensured that we have exercising full control on all safety measures, including the safety measures in terms of audits on the first day conducted in the area of hazardous material returning. And not to mention the strict implementation of social distancing, not to mention the strict hygiene management processes, as well as use of personal protective equipment like face masks are being made mandatory, and gloves to be used wherever it is required. So we have a comprehensive review mechanism here, a thorough check, and we are complying with all the requirements that the authorities have asked us to maintain in this process. I would like to now move to the next slide, which talks a little bit on the economy and market. I'm on slide 6 of the presentation, wherein you would see that the gradual slowdown on the GDP trend in the country. And the numbers what we have shown here, Q4 of 2019, we were around 4.5 to 4.7% GDP. Going forward, it is anybody's guess. we have been hearing, seeing and reading reports which are forecasting the GDP that will get trimmed down somewhere around -1 to +2. It could be land anywhere. So it's a question of time that the real GDP numbers would start to emerge. And it's all this uncertainty that was there. The government in its bid is trying to do its best to recover the situation. How is the market going to respond to this situation? And what implications it will have on component manufacturers like us is something that we will have to experience it as time moves forward. Having said this, surely it has been a challenging first quarter, and the second quarter appears to be much more challenging than the first quarter. I would like to move to the next slide, which talks a little bit on our performance in the first quarter. But before that, let me touch a little bit on the sectoral performances. I'm on slide 7, which shows you the trends of sectoral performances in the country. If you were to look at the industrial sector, the cement production for the first 2 months, January and February, if you look at the numbers, was a pretty strong performance than the first quarter of the previous year. And as you can see, the trend, the line trend was also showing an upward movement, which was very promising to look at. Look at the steel production, exactly the same performance and trend. It was showing much better performance in the first 2 months of January and February this year compared to the last year. Mining has been a good super performance, as you can see. A consistent growth in the mining industry, thanks to the initiatives that the government took in opening up the FDI involvement into this sector, investments coming into this sector. Power generation too was much better in the first 2 months. Come March, and with the lockdown the government announced from the 23rd of March, incidentally the month of March too started off well, but however, because of the lack of productivity in the last 10 days of the month, you can see the March performance was truncated, and surely this has impacted the performance of all organizations, including us. I would like to now move to slide 8, which talks a little bit on the automotive sector performance. And as you can see here, this is one of the sectors that has been pretty hard hit, and this was already having big challenges in the second half of last year, and the woes continued in this year, and it went into a further worse situation, as you can see. Let me start by talking about the two-wheelers, which has been very badly impacted, as you can see here. January and February, the first 2 months, the industry was already 26% down. And I'm sure you are aware of the fact, end of April, the numbers are looking -50% compared to the same period last year. So two-wheelers is one sector that has been hit pretty badly during this first quarter. Look at the passenger vehicles, and you will see the same. Again, passenger vehicles continued its impact, as you can see. The continuous slowing down that was happening since the second half of 2019, it spilled over into the first 3 months as well. And as you can see, it was down 19% for the first 3 months over the same period last year. Commercial vehicles, well, this is a sector that has been impacted very badly the whole of entire last year, and it continues to have its challenges this year. As you can see here, it was almost 36% down in the first quarter of this year. Tractors, things began to improve a bit since the last quarter, and as you can see, it began to pick up in January and February as well. More or less, it was on the same lines of the first quarter numbers of last year, 4% lower than the first quarter. But amongst all automotive sectors, the tractor sector was one that began to show a little bit of improvement. I now move to slide number 9. And I'm on the slide which talks about the first quarter highlights and lowlights. And so, to summarize the performance of Schaeffler India, the first quarter profit margin was at kind of the same level as Q4 2019, despite the shutdown of operations since the 23rd of March due to the COVID crisis. However, we were able to manage the working capital in a very good manner, and this continued to be at a much lower level than the last year. Also, we were able to drive a strong push on the cash generation, and we had a very strong free cash flow, and our liquidity position was very strong in spite of the performance loss that we encountered in the month of March. So, as we are in the situation right now, the priority and focus is to make sure that we protect and run and continue the business once it begins to restart. We try and reshape our business, looking at how the market and the business landscape changes, and we are preparing for that right now. On the flip side, due to the operational halt, so we had the revenue loss happening in the month of March, as well as our productivity loss from our plants because we had to start the operations from the 23rd of March. So on this backdrop, I move to the next slide. Schaeffler India for the first quarter 2020 has posted 928.5 crores of revenue from operations as against 1,036 crores of the previous quarter. And that is a 10.4% lower than the previous quarter of 2019, however, if you were to compare the Q1 2020 performance with respect to Q1 2019 performance, we are down 21%. I would not compare that as an apple-to-apple comparison, fundamentally because the automotive industry began to go down very badly in the second half of last year. So, with all this, we are an organization where 80% of our business is focused on the mobility sector and 20% of our business is focused on the non-mobility sector, which is attributing to the industrial space. So, absolutely, due to the volatility in the market and the demand slowdown and some sectors which were continued to be affected, it was a challenging quarter. However, I move to the next slide wherein I'm going to share the profit before tax. And what you see here is, in spite of the challenging quarter that we had, we posted a profit of 110.1 crores for the first quarter of 2020 against 124 crores of the previous quarter. That was 11.9% lower than the previous quarter. So, nutshell, despite the revenue loss, we were able to manage our profitability reasonably well, mainly because we took a lot of corrective actions. We were able to control and manage our overhead costs well. We put in a robust review mechanism to see that
performance and investment without compromising on our strategies of growth. That is the focus that we are going to have, and our announcement and the commitment of 3 years investments to the tune of approximately 1,000 crores still remains unchanged. There will only be a little bit shift between this and next year.
Thank you so much, sir, for a detailed explanation and taking all my questions.
Thanks.
Thank you. We would request participants to please limit your questions to 3 at a time. The next question is from the line of Shyam Sundar Sriram from Sundaram Mutual Fund. Please go ahead.
Yeah, hi sir. Good morning. Thanks much for the opportunity, sir. Hope everybody is safe and sound at this point of time. So my first question is on the aftermarket, both on the auto and the industrial side. For us, the aftermarket is anywhere around 23-24%. How was the aftermarket performance? We did see a deterioration in aftermarket in the quarter 4. How was it in quarter 1? and whether that also was a lever in terms of improvement in the gross margins that we saw this quarter. And what is the outlook there in terms of the aftermarket, both on the auto and industrial, given dealers seem to be under a lot of stress at this point in time?
Yeah, thanks, Shyam. So on the aftermarket, if you see our performance in the last quarter, Q4 of 2019, automotive aftermarket, we posted a very strong performance. And fundamentally, the market is a cyclical market, and it is towards the last quarter always, the market does well, which did well. Coming into this quarter, Q1, yes, it always starts a little low, but then tends to pick up. However, I would like to add here that our endeavor to expand our range of products offering in the aftermarket was very good. We took steps last year to bring in more products into the portfolio, particularly in the clutch applications, and we have been very strong in that. We are continuing to build on it. And you will see that even in this year, 2020, our automotive aftermarket performance we estimate, is going to be very good because it is riding on the back of new product launches, and we are there with the market as the market needs. So that is on the industrial aftermarket. If I were to elaborate a bit, although the last quarter of last year, 2019, we saw good performance, the first quarter of this year was a little muted, fundamentally coming on the backdrop of the liquidity crunch that was there, as well as some of the government projects that were put on hold. So as a result, the demand went down a bit in the industrial space of the aftermarket. We are hoping now with the new initiatives that the government is trying to create the pull and the consumer demand to go up. We expect the industrial aftermarket also to start picking up.
Right, sir. Any numbers you can share on the aftermarket side, sir? At all? In terms of growth or decline there?
All I can say is definitely we are on a growth trajectory when it comes to the automotive aftermarket, because the simple logic that it goes by is if the automotive OE market is down, surely people would end up getting their cars and the bikes and trucks serviced more often. So the demand for the automotive aftermarket products in the automotive industry would definitely go up, and we see that happening already because people would, and with a very weak sentiments on consumer spending, people would hold back buying new cars, so they would rather spend on their cars to repair the cars. So we see definitely there is a strong growth going forward.
Right, sir. Thank you for that, sir. And within the auto OE, between the cars, two-wheelers, CVs, and tractors, so we were expecting a content increase, at least on the car side, with the new products per se. How are we still seeing the traction going forward, or has there been any change in terms of the OE plans this year? And do we expect to outperform the underlying auto market from a production perspective? Can we outperform that with our new product pipeline then?
Rightfully, our focus is on improving our content per vehicle. There is no doubt about that. And we have got our act together to continue to build on it and make sure that our content per vehicle grows. However, as you know, the landscape in the market also keeps changing. And what we have seen is, compared to last year, our content per vehicle actually has increased. However, it has not increased in the areas where we expected it will increase. There were some of the sectors where we saw that we were able to increase the content per vehicle because our products were well accepted, and we have already, like in the light commercial vehicle sector, we have had a very strong increase in the content per vehicle. We have almost doubled our content per vehicle in the light commercial vehicles. Whereas when you look at the passenger cars, yes, it is increasing. But yes, it all boils down to how fast the BS6 norm would get implemented and the acceptance of the vehicles. However, all I can tell you is we are ready, we are geared up, and as the vehicles start to sell more, we will see our content per vehicle increase. But we are on the right trajectory as of now.
Understood, sir. Understood. Sir, and between the chassis, engine, and the transmission within the auto, what would be the mix approximately, if you can give some color on that?
In our business,
Yes, sir.
Satish, you have the numbers with you?
Yeah. Let me just take that. Within automotive, engine system is about 30%, yeah, and transmission is about 50%, yeah, and the balance is all about chassis and other systems, other components.
Okay. Sir, and just one last question, if I may. Within the industrial segment, other than the aftermarket, where are we seeing some positivity? And broadly, what is your outlook on the industrial side?
Okay. On the industrial sectors, the year started off very well, and we began to see a very good demand on the wind. The off-road construction equipment sector was doing very well for us. The power transmission sector began to do well for us. The raw material sector began to do very well for us. So primarily the sectors related to mining industry, where all your off-road vehicles, construction equipment, they began to do very well for us. Wind, mainly because India is being used as an export hub by all the wind manufacturers like Siemens, Gamesa, GE, Vestas. Everyone is using India as a base, and we have a strong presence. So that is looking very positive. The railway sector is another one on the backdrop of the drive and initiatives that the government is taking, both in terms of investments and in terms of privatization. We find that there's the new energy in the railway sector, so we see rail going to be a very strong growth, both in the Indian Railways and in the metro trains, both.
Right, sir. So just one thing, if I can speak in from an export perspective, how are you looking at exports for this year? I mean, is there any talk of a supply chain shift happening and more sourcing from India? Is that something that you're seeing, at least on the auto side? How is the export market and for us looking like, sir, for Schaeffler India?
Yeah, as far as exports are concerned, as we have been also talking that 10 to 15% revenue, our revenue is constituting exports. There have been plans, as when I mentioned about mix for localizations, and there are also certain plans across the globe within Schaeffler world. And wherever we have critical mass and wherever we have competence, particularly on the cylindrical roller bearings, particularly on the large size bearings, and certain chassis components, there would be some focus. However, this would depend upon the competence that we have and how much we can leverage. I do not think that because of the conditions we are in currently, this is going to change dramatically. So this is as part of the strategy, and going forward, yes, there is a focus, but because of the conditions, nothing is going to significantly change as far as exports are concerned.
Okay.
If I may add to what Satish just said, I would relate this to the previous question that was asked as well in terms of our investments. As you can see, a lot of our investments is also being done to localize a lot of products which we have been importing from Europe and elsewhere. Also, we did share in the previous investor call that Schaeffler India is now under the Asia Pacific region. So India, the manufacturing footprint here in India would play a big role in exports to the Southeast Asian countries, Japan, Korea, all the countries in the Asia Pacific region. So this is with a clear strategy that we have been continuing to invest and localize. In fact, one of the good indicators that our Q1 performance was very good was because we were able to sell a lot of our own manufactured products from India, which up until last year we were continuing to import. So there's a huge localization drive so that India can become a major exporter of the products, not just the Asia Pacific region, but for the entire world.
Understood, sir. That's very good to hear, sir. Thank you. I'll join that. Thank you.
Thank you. The next question is from the line of Hitesh Goyal from Kotak Securities. Please go ahead.
Thanks for taking my question, sir. Sir, my question pertains to, again, exports. We talked about, Schaeffler India becoming important element for the Southeast Asian market. We have also seen last 4-5 years, even in most of your competitors and yours also, exports have grown quite well. So can you tell us something about these? Is this a substitution of exports, coming from global entities from China to India? How is the global, entities looking at India? Or can you also share some about commonality of products, which is coming from China to global markets and from India? So is there a theme here which can play out over the next 4-5 years for Schaeffler India?
Well, I do not know about the China to India, China to the rest of the world. All I can say is that we at Schaeffler, we have a very clear strategy that the plants in India would play a very important role. And we have already started extensive work with our Asia Pacific region, where we can increase the market presence of Schaeffler in the Asia Pacific region, particularly on the industrial side of the business. And we see huge potential here. Hence, you will see a large part of the investments that we are making is on the industrial side as well. A lot of localization that is happening is on the large size bearings, which the rest of Asia Pacific is continuously being importing from Europe, which now we have already drawn up plans to start shipping them from India, and we are getting our act together, be it in terms of the quality of the product, be it in terms of the quality of the packaging. We want to have the same standards going forward so that, the customers and the end users do not see a difference whether this comes from Europe or it comes from India. That is very clear to us.
Sir, any targets that you have that what can exports be as a percentage of the revenue in next 5 years? Will it outgrow the domestic market, or will it what is the strategic 5-year focus on this business?
Sorry, Satish, go on, Satish.
Yeah, so I think it is comprehensively talked about by Harsha and also earlier by me, that as far as our strategy that we have laid out for exports, focusing on critical mass, focusing on the market, and focusing on the cost, that would remain unchanged. In addition to that, there are opportunities because of the regions, like Asia Pacific regions, there are opportunities. We have strength in two-wheeler products. We have strength in chassis products. So those would definitely be focused for exports. However, there is no particular number that how much this would be as of now against 10 to 15, what would be that 3 to 4 years from now? There is no such particular number, but yes, there is a focus, and wherever we have competence, that is the sort of a area of focus for exports, and that is part of the strategy, and we are focusing, and we are continue to focus on those strategies.
Okay.
Sorry, Harsha,
if I may, No. If I may add, Satish, this lockdown kind of has given us a very big opportunity for us to start preparing for all the new things that's going to happen. So one of the big investments that we have done is invested in a lot of training hours during this period with our employees. We have retooled them for all the new products that we will be launching, we want to bring, and we want to produce from India and market to the external world. So we have leveraged this opportunity to exactly sit down and re-strategize. So where should we be playing? What are our strengths and how can we play to our strengths? So we have clearly done that in the last 50 days, odd days of shutdown that we have had. And we have spent in a lot of man hours, almost 35 to 40,000 man hours of training that have been done to our employees to prepare them for the new norm that is going to come. And there could be new markets that will emerge, and we want to be ready for that. And that's exactly the direction. So we definitely want to play a strong role in the export market.
Okay. So thank you for that answer, sir. The second question is basically related to margins. If you look at margins for Schaeffler from the peak has dropped quite a lot. Is that pertaining to only the automotive segment or because you brought in new products where localizations were lower, so margins were lower? Can you shed some light on that? How should we look at margin trajectory in a normalized case? I'm not talking about FY21. Say, for example, normal businesses resume.
Yeah. So in the normalized case, I think if you see our 2019 margins, operating margins were close to 16%. In 2019, except the, let's say, a few months of half two, was normal year. 2018 was 17%. So 17 and 16, that was the range of margin. That level of operating margin we can sustain under the normal circumstance. There is definitely a difference between operating margins across the segments, and we have both businesses. We have OE business, we have aftermarket and distribution business. Within OE business, there are different technological-oriented and cost-oriented product lines and the segments. Between automotive and industrial. Within industrial also, there are varied segments. You talk about wind to railways to two-wheelers to tractors. So definitely the margin situation is different for different segments, but overall margin that we have achieved in 18 and 19, that's the normal level of margin that we can have.
Great, sir. Thank you and all the best, and hope all Schaeffler employees are safe and healthy. Thank you.
Thank you. Thank you.
Thank you. The next question is from the line of Vimal Gohil from Union Asset Management. Please go ahead.
Yes, sir. Thank you for the opportunity. Sir, I wasn't very clear about the mix in this particular quarter. If you could break up your revenues between automotive, industrial, and for the OEM part and both the aftermarkets as well this quarter, and how much was exports?
I mean, if I answer this in the little time constraint, whatever we said about the mix of the sales and our business in the last investor call, that has remained unchanged. So you can still take those numbers as far as the mix is concerned. Between those segments, there is no change in this quarter. So there is fraction of a percentage probably change between the segments. So we can spell out, but it will take some time. And I think in the interest of time, I would suggest that you refer those mix percentages that we announced last time.
Okay. And sir, what would be the cash on books right now?
Yeah, we have a strong liquidity. Our cash position is quite strong. We generated about 150 crores of liquidity. I mean, the free cash flow in first quarter. The cash position is close to 1,000 crores.
Fair enough, sir. Thank you. All the best, and please stay safe. Thank you.
Thank you.
Thank you. The next question from the line of Priya Ranjan from Antique Stock Broking. Please go ahead.
Yeah, thanks for taking my question, and I hope everybody in the family and employees base is actually safe. And just on the industrial side, if you can throw some light on, you said very strong growth in wind, raw material and railways. So if you can throw some light on what kind of growth, I mean, when you say strong, what kind of growth we have achieved. And also, suppose because this quarter was a transition quarter for BS4 to BS6, so probably the tool revenue should have been doing better. And if you can throw some light on the tooling parts as well.
Sorry, I didn't get the last part of your question. If you would mind repeating that?
Yes, for the tools, the industrial tool segment, because that is catching to the automotive segment, and this was a quarter for transition from the BS4 to BS6. So a lot of tooling business might have come in this quarter, so supposed to come in.
Okay. One of the sectors which we have is the industrial automation, we call it. And that's a sector which actually, it caters to the machine tool industry. Unfortunately, that is one sector that it's been now more than close to 16 months that it has not done well. Primarily because the industrial automation sector rides on the back of the automotive industry because they are the big consumers of machine tools. So our business in that sector is kind of stagnating. It has not shown any growth at all. Well, if the market picks up, surely we have a strong product portfolio offerings there, and we will increase our offering there. So that's on the machine tool industry. And if I had understood your first part of the question, it was to do more with which sectors are doing well and how are they doing. I did mention already about wind, about the rail, which is doing pretty good for us. And rail, incidentally, we are also going to start our exports to the rest of the world, particularly to the US market as well. So we are getting ready for that. We see a lot of players, of global players for the wind coming into India and setting shop here to use India as a base, and we are there with every wind equipment manufacturer. So rightfully, that sector is going to grow. If not domestic consumption, surely exports will grow. And we are there. We are going to ride the wave on wind. There is no doubt about that.
Okay. So when do you see, I guess the ZF is actually the customer in that segment. So how they are placed in terms of their own utilization level in terms of wind. So we have been seeing this growth since last one odd years, even more than a year now. So do you think when can we achieve the peak level of volume from that side and based on their capacity plans, etc.?
See, as you all know, this is a very unprecedented challenge that we are going through, unprecedented times that we are going through. So having said that, and this is the first time that we have come across this kind of a situation. So for me to kind of fix a number and say, oh, this is exactly what's going to happen, I think would be unfair. So it is best that we wait, watch, and every customer would try to evolve. Everyone is trying to see how to manage the current situation. And I think as Schaeffler team, our primary responsibility is to watch what our customers are doing and, be agile and adaptive enough to meet the changing customer needs. So the key focus area for us is adaptability and agility. These two will be driving the entire team to say, let's watch and let's adapt to the situation and be agile to adapt to the situation. That would be my answer.
Mm-hmm. Okay. And in terms of railway, how do you see, this lockdown, do you see some kind of slowdown in the investment side on the railway, or do you see the strong traction which we have been witnessing for the last 1 year to continue? Although I think the segment is still small for you guys.
If you look at railways, the government is very, focused on improving the railway network in India. It's not just in extending the coverage in terms of number of kilometers per kilometer, but they are also looking at three primary areas, and that is to address the safety, to address the performance and reliability, and last, the comfort and convenience. These are the three broad areas the railway is focused on. And rightfully, we are geared up. We do have products in at least two of these, definitely in terms of safety and in terms of product performance and reliability of the trains. We are going to play a big role. Having said that, when you look at the railways, they are also, railways for the first time have started to privatize some of the sectors. I'm sure you must have read about Delhi Meerut sector going to be privatized and handed over to a private multinational to run and manage the trains. Similarly, a few more sectors have been opening up. Also, the dedicated freight corridors that the government of India is driving now is definitely going to help boost the freight carriage by train is more economical than by road. So there's going to be a lot of impetus and development that's going to happen on the railway sector, which will continue to grow. And we are gearing up for that. We are, in fact, a lot of investments that Satish pointed out is also going to be in the railway sector that going forward.
And lastly, on the cost front, I mean, if you can classify your the employee cost and the other expenses line item, what can we think of, say, variability of that, and what kind of fixed in nature? I mean, broadly, I mean, I'm not saying exactly, but broadly, what?
I mean, except investment, which is reflected as depreciation cost, except this cost, all other costs have certain element of variability. And good that we have actually, as part of our cost flexing measures over the years, ensure that we roll out projects such that we are able to manage costs well and flex costs well whenever called for. So even in growth times also we have worked on such projects and continue to work on that project as such projects. We had rolled out and have been successfully achieved the results also last year, for example. So except depreciation, everything else has certain element of variability, including the employee cost. So we have certain type of benefits. For example, if you produce more, you earn more. If you produce less, you earn less. So there is some production incentive, which is variable. So likewise, there is a variability in employee cost also. There is variable pay for indirect employee based on performance, which we have also quite well elaborated and announced in the annual report as well. So within employee cost also there is variability. In all other expenses also variability. Last 2 years we have rolled out projects on logistics side to move from fixed logistics centers to logistics centers which are having some variability. So if you utilize your logistics center, let's say 20% less, you save some cost and not entirely contributed by fixed costs.
Okay. Lastly, on the cost front, I mean, what at the time of merger we have announced a bit of the consolidation in terms of operation and the cost control measures, etc. So are we, I mean, through with all those efforts, what we have announced at the
right. Right. I think this question was also raised during the last call, and we had confirmed that on the cost side we have realized nearly all the projects that we have rolled out, which are part of the synergy projects of a merger. So we have realized the cost benefits as part of synergy. On the sales side, yes, there are a couple of projects which will still take some time. For example, on the distribution side and a couple of projects in automotive side. The plan was to complete that by 21, and those projects are in progress. But on the cost side, large amount of the projects have been implemented and realized as part of synergies.
Sure. Thanks. That's all from my side.
Thank you.
Thank you. The next question is from the line of Lakshmi Narayan from ICICI Mutual Fund. Please go ahead.
Yeah. I guess cars as a part of your revenue is around a third, right? And there is, I think, a couple of quarters back you mentioned the possible loss in business because of dieselization of engines. Less of diesel cars being produced, and we being the largest manufacturer of cars in India. So if you can just throw light on something, because there has been a significant drop in the diesel cars production. So how are you substituting the loss in revenue, if at all, for the car segment?
Yeah. I guess the question was asked in the last investor call as well. And at that time, I had replied that we are fully aware of the fact that there is a technology shift happening from diesel to petrol engines, mainly because of the shift from BS4 to BS6 emission norms. Having said that, I had also shared that we have a product portfolios in the petrol domain, which we began to increase our range of product offerings in the petrol portfolio. So we clearly are working with the largest OEM manufacturers already, and be it the engine application or even the transmission applications, both the applications which do contribute to the BS6 norms, we are fully engaged, and that is one of the reasons I did mention to one of the questions earlier in the call today, that our content per vehicle, which we have a clear strategy to continue to increase, we are prepared for that. We have our actions, the products are there. If the market picks up, yes, you are going to see the gain in the market share as well, because we will have a much larger market offering when it comes to the engine application and the transmission applications.
Okay. Thank you.
Thank you. Ladies and gentlemen, due to time constraints, that was the last question. I now hand the conference over to Mr. Vijay Chaudhary for closing comments. Mr. Vijay Chaudhary, you may go ahead.
Yes. Thank you, ladies and gentlemen, for your participation. We extended the call by 10 minutes because we started a few minutes late. We will now close the call as the management has.
Vijay, I just wanted to say a word. I wish all of you to stay safe and healthy. Please take care of your loved ones because these are unprecedented times, as I said. So it's important that each one of you take care of yourself. Stay safe.
Thank you. And with that, if you have any further questions, please do reach out to us on an email. You can drop me an email on vijay.chaudhary, that's vijay.chaudhury@schaeffler.com. Thank you and have a good day. Stay safe.
Thank you all.
Thank you.
Thank you. On behalf of Schaeffler India Limited, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.